Let's do one more question. The outlines of the questions are 1st January 2013 bar 10,000 bar 3 years bar 1,000. 31st December each year. This is in the next line. So this is the question for you. What it means. On 1st January 2013, a machinery was purchased for 10,000 and the working life of this machinery was 3 years and the scrap value was 1,000. It means during the 3 years, the company will lose 9,000 as depreciation. So total depreciation for 3 years, 9,000 rupees. And depreciation for 1 year will be equal to 9,000 upon 3, means 3,000 rupees. Means in this company, on this machinery, 3,000 depreciation will be provided per year on rupees 10,000. If we express this amount in percentage, what will be the percentage? I mean to say 3,000 on 10,000. Very simple arithmetic. That is 30%. Means 30% of 10,000. In other words, the question can be presented in this way. A machinery was purchased for 10,000 and depreciation will be provided on this machinery at the rate of 30% per annum. So in the future, you will find the questions that the depreciation will be expressed in percentage. Suppose the question is on 1st January 2013, a machinery was purchased for ₹10,000 and the depreciation was provided 30% per annum and the books are closed on 31st December each year. This is the text of the question. If you make the outlines of this question, that will be 1st January 2013 bar purchased bar 10,000 and in the next line 30% per annum bar 31st December each year. If the depreciation is provided in percentage, we don't need any working life or scrap value because we need the working life or scrap value for the purpose of calculating annual depreciation. But annual depreciation is already there in percentage, so we don't need all these things. Let's do one more practical. On 1st April 2012, bar purchased bar 10,000 and in the next line 30% per annum bar 31st December each year. So this is the question and you have to prepare the journal entries up to 31st December 2015. So one thing is clear, 30% of 10,000 is equal to 3,000 rupees. It means the depreciation will be provided 3,000 each year. So what will be the journal entry? On 1st April 2013, we have bought the machinery and the journal entry will be machinery account debit to cash account rupees 10,000. On 31st December 2013, we have to pass two journal entries, depreciation account debit to machinery account and profit and loss account debit to depreciation account. You know, two journal entries are passed on the day of closing. Number 1, depreciation is provided. Number 2, depreciation account is transferred to profit and loss account. Now, depreciation to machinery. If you look at the question carefully, the machinery was purchased on 1st April 2013 and today is the closing and the date is 31st December 2013. It means the usage of the machinery during this year was 9 months. It means we have to provide the depreciation only for 9 months and the depreciation for 12 months is equal to 3,000. So for 9 months it will be equal to 3,000 upon 12 into 9. That will be 2,250. It means the depreciation during this year will be provided 2,250. Be careful. When you provide the depreciation, on that date, you must be careful about the uses of the asset. During this year, the uses of the asset is only for 9 months. Then profit and loss account debit to depreciation account. That will be 2,250. Now come to the next closing, 31st December 2014. During this year, the usage of the machinery was for the whole year and the annual depreciation is 3000. It means depreciation will be provided rupees 3000. You know, two journal entries are passed. Depreciation account debit to machinery account and profit and loss account debit to depreciation account, and rupees 3000 for both of the entries. Then come to the next closing. The next closing is 31st December 2015. We have to provide depreciation and we have to pass two journal entries. Depreciation account debit to machinery, profit and loss account debit to depreciation account. Because the usage was for the whole year and the depreciation for whole year is 3000. So rupees 3000 will be the amount for both of entries. So you must have noticed this thing, that depreciation is provided on the basis of usage during the year. If the machinery has been used for the whole year, you will have to provide the depreciation for the whole year. Or if the machinery has been used for the part of the year, you will have to provide part depreciation. And depreciation is always provided on the day of closing. Depreciation account must be closed or transferred to profit and loss account on the day of closing. So you have noticed in this question that every year the amount of depreciation was rupees 3000 in all my previous questions. It means this is the fixed amount every year. If the depreciation amount is same for the coming years in every year, that method is called fixed installment method, because every time the amount is fixed. Or sometimes it is called original value method. Original value method means the original value of this machinery is 10,000 and depreciation is provided at the rate of 30%. Means in first year 30% of 10,000. In the next year 30% of 10,000. In the next year 30% of 10,000. Means every time it is provided on 10,000, which is the original value of the asset. That's why sometimes it is called original value method. If you plot these figures on the graph, on vertical line you write down 1,000, 2,000, 3,000. This is for the depreciation amount. And on horizontal line you can write down 2013, 2014, 2015. If you plot the figures on the graph, you will find there is a straight line for the amount. That's why it is called straight line method. So you can call any name.